from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Alphabet's earnings mostly in line with estimates. A sigh of relief for those concerned about the digital ad market. But the same can't be said for Microsoft, which posted the slowest sales growth since 2020. We will look into these mixed results. Plus, the $52 billion CHIPS Act is one step closer to President Biden's desk. This means U.S. tech companies won't have to rely so much on Taiwan, where House Speaker Nancy Pelosi may visit next month. The Chinese government not happy about it. We'll have the latest from Capitol Hill. And more scrutiny for cryptocurrencies. The SEC is investigating Coinbase over possible trading of unregistered securities, accusing a former Coinbase manager of insider trading just last week. We will have all the details. We'll get to all of that in a moment, but first I want to get a look at the markets. It is the mega caps' turn to report results, starting with Microsoft and the parent company of Google, of course, Alphabet. Our Ed Ludlow here with the top lines from the quarter. Ed, take it away.
Yeah, let's go straight to Microsoft. We're actually a touch higher now, 0.3% after hours on Tuesday, but we had been significantly lower after Microsoft missed on the top and bottom line here. The story is the stronger dollar is impacting overseas revenue and profit, but we're also seeing a pullback, a bigger than expected pullback in spending on cloud and software services. The revenue coming in at $51.9 billion in the quarter, 12% growth, but not the growth we've been used to in this pandemic period. Next up, Alphabet, the parent company of Google. It missed on every top and bottom line metric apart from one, the one that mattered, advertising revenue, coming in better than expected. That stock now high by 3% in after hours. A concern after we had Snap earnings last week was that this was a tough advertising market. But as you know, search ads held up really well. There was some modest growth in YouTube as well. But in other areas, Alphabet did struggle. I know you're going to dig into that in the rest of the show. It's also interesting, by the way, to see names like Meta, the parent company of Facebook, and Pinterest also rising in after hours in that positivity around the ad market. This is where we finished the day during Tuesday's session. The NASDAQ 100 down 2% ahead of a key Fed decision on Wednesday, where we will find out by how much rates go up. But Amazon was a really big drag, the biggest drag, in fact, on the NASDAQ 100, selling off down 5% after Walmart, its e-commerce rival, you'll remember, on Monday cut its profit outlook with the changing consumer picture. Shopify also down 14% after confirming Monday that it would cut headcount by 10%.
All right, thank you. I want to stay with earnings, bring in Dan Newman, analyst for the research firm Futurum. All right, Dan, what are your big picture takeaways? Microsoft doesn't look good. They highlighted the strong dollar, which Google highlighted as well, though their results looking somewhat better.
Yeah, I think there were narrow misses across the board, Emily. I think people have been kind of waiting to see when do we finally hit that inflection point where the beats stop. You know, the market's been selling like these companies haven't been performing for the past few quarters, and actually they have been performing quite well. Now we've got a number of factors. You've got FX, you've got the Ukraine, Russia, you've got shutdowns in China, and all of these were impacting Microsoft's numbers. But if you look, there were pretty narrow misses on both top and bottom line. I think Microsoft said there was something like $1 billion tied to the shutdowns that I mentioned in China, to the FX impact, as well as the Ukraine, Russia. And that's actually about 6 cents, which would have taken them to hitting that EPS target. The cloud number at 40% is still good. It's decelerating a little bit. And you saw Dynamics 365, the ERP, which is something I've been looking close at enterprise software buying. That number stayed really strong. But some of the other areas, again, it just seemed like narrow misses everywhere, Emily. And so that was Microsoft. And of course, what you mentioned with Google is the ad market seemed to be stronger with Alphabet than people had expected. It has slowed. But the question is, do people outside of us who are watching this every day realize we're in a recession? If you saw Prime Day, if you look at the advertising spend, it looks like people are still shopping.
Shopping indeed. I just got off the phone with Alphabet CFO Ruth Porat, and she used that word uncertainty a number of times. I'm expecting to get even more color on the earnings call with Sundar Pichai about just what kind of uncertainty. But here she says uncertainty is the best way to characterize what we're seeing. But the reality of the data is that it's complicated. The results reflect the lapping of significant growth last year, plus uncertainty in the global economic environment. And what she talked about was that there are a variety of factors at play here, but it's really challenging to disaggregate them. So, they're continuing to use this word uncertainty. What do you take away from that?
Well, it's a reason we're having a hard time deciding whether or not we're in a recession right now. You see some of the numbers indicate that there's still strength. There's some growth across tech, because again, all these numbers are growth on a year-over-year basis. So we thought 2021 had all this digital transformation acceleration, and these numbers are better. Now, they're decelerated growth for both Google and for Microsoft, but they're up on a year-over-year basis. So people are spending more money on technology, more money on advertising than a year ago when we thought the market was growing at an explosive rate. So now we're entering this slowdown period. We've got inflation, we've got FX, we've got interest rate hikes. And I think some of the reason that there's some enthusiasm about these misses is we've been waiting for this. We've been waiting to see some of this Fed policy, some of the monetary policy that's coming into place actually having companies start to slow down, having guidance start to slow down and say, look, some of what's happening is working. The demand is slowing. But I still lean that enterprise tech, I still lean that e-commerce and platforms will be remarkably strong because we've become hyper dependent on them throughout the pandemic. I don't see that changing. And companies that are going to want to wade their way through this slow in the economy are going to be looking to technology to help automate, to invest in AI and utilize cloud technologies to actually scale their businesses with less big overhead resources and of course slowed hiring, which means technology is going to have to take the brunt of the weight.
Now, when it came to advertising specifically, she talked about the growth driven by travel and retail, which continued to be strong. Makes sense, of course, as we are coming out, hopefully, of a pandemic. But she did talk about the pullback, and she used that word pullback by some advertisers, reflecting uncertainty about a number of factors they view as, again, as I said, challenging to disaggregate. What do you make of her use of that word pullback? Because everybody is wondering, is what we saw with Snap and Twitter going to impact Google as well? Is Google somehow immune to this, given that it is such a broad-based business, or not?
Well, the numbers indicate that there's clearly prioritization. And so Google seems to be above the fold, whereas we saw what happened to Snap and what's happened to Meta over the past few quarters, where there has been more pullback. And of course, Ruth Porat was saying they're seeing some pullback too, but that's more deceleration than overall slowing of growth altogether. The indicators here are that companies that are going to go online still believe Google is their best bet, if not, one of their best bets, and that's why we're continuing to see the spend there. I do think some companies that understand what's going on are starting to look at whether that's slowing hiring, slowing ad expense. We're seeing that across the board. We've heard the announcements from companies that are going to do less hiring, that are going to spend less on advertising, and that's part of this period of economic uncertainty and slowdown. So none of this is surprising. I think smart companies understand you cannot entirely save your way to growth in the future, but you might want to slow down temporarily until we get a good handle of what's going on here. And there are so many factors, so much inconsistency in the data, and that's why, like I said, we're having a hard time making final decisions. The Fed's having a hard time. The markets are having a hard time because we're seeing some numbers look good and some numbers look incredibly bad or at risk right now.
Right, and maybe even Google's having a hard time, and clearly Microsoft is having a hard time. I did ask her, by the way, about competition from TikTok in particular, and they doubled down on clearly people want to consume short-form videos. So she talked about YouTube Shorts, and she talked about focusing on engagement and the experience, and the hope is that monetization will come later. Okay, Dan Newman, Future, thanks for helping us to unpack a lot of very difficult and challenging circumstances to separate out. Appreciate it. Well, Twitter and Elon Musk are fighting about the start date for their Delaware trial. Twitter wants to begin October 10th, Musk asking for October 17th. A lawyer for Musk says the social media platform isn't producing the requested documents in a timely way. He also said Twitter is resisting turning over raw data, causing a, quote, logjam in the production of evidence the defense needs. Coming up, the Senate set to vote on the all-important CHIPS Act as Alibaba pushes to list in Hong Kong amid rising tensions between the U.S. and China. The latest from D.C. next. This is Bloomberg. Today, the Senate advanced a $52 billion bill that would bolster the U.S. semiconductor industry, setting it up for a final vote. This comes as House Speaker Nancy Pelosi seems dead set on plans to visit Taiwan next month. Beijing has warned Pelosi not to come. The Chinese government, of course, has long considered Taiwan to be part of its territory. It's also the chip capital of the world. Bloomberg Government's Emily Wilkins has the details from Capitol Hill. So a lot going on here, as always, in the U.S.-China relationship. Emily, let's start with the CHIPS Act. Just how close are we?
So right now, the Senate has cleared 2 procedural votes, which means that all they have to do is now actually pass the legislation. They're looking at doing that tomorrow. Remember, there's a lot of Senate rules about timing and stuff that prevents them from doing it right now. But at this point, it absolutely seems like they have the votes. We've seen a lot of bipartisan support for this one, a number of Republicans joining Democrats on these votes. In fact, even though we do have a couple Democrats who aren't here right now because they've tested positive for COVID-19, it still seems like this is going to have the support to clear the Senate. From there, it will move on to the House, where the House leaders have promised a very quick vote on this. Really shows that this is something that folks want to get done, especially before the House is scheduled to leave town on Friday for a long recess.
Difficult to isolate, but how will this particular bill impact U.S.-China tensions?
I mean, to a certain extent, this bill initially started out as something that was supposed to really bolster U.S. competitiveness with China. And it will still do that in some regards, making sure that the U.S. is able to produce semiconductors, boosting the National Science Foundation. But it's not really the strong anti-China bill that it was at the beginning. Most provisions have gotten stripped out in the interest of time and getting something done quickly. There really aren't that many days left for lawmakers to do work before the November midterm elections. And so, honestly, this is probably a more China-friendly bill than what we initially began to see and to start out with. But that doesn't mean that President Biden is going to have an easy call with President Xi Jinping. Biden said he'd be speaking with the Chinese president within the next 10 days. And of course, something that's going to be coming up during that call is House Speaker Nancy Pelosi's proposed trip to Taiwan.
On this proposed trip to Taiwan, this would be the first of its kind in 25 years. We've heard these warnings from the Chinese government. Do not come, but it seems like this trip is going to happen. What do you make of this and how this trip will impact the U.S.-China relationship?
So one notable thing is that President Biden was actually a little bit hesitant on Pelosi going on this trip, but you have heard a lot of lawmakers from her own party and from Republicans saying that Pelosi shouldn't back down to China, shouldn't back down to Beijing's concerns, and should absolutely go. You heard a Republican Senate Minority Leader Mitch McConnell say today that Pelosi would be handing China a victory if she was to cancel her trip now. And you've heard similar support from other Democrats and Republicans. So it seems like at this point, even though the executive branch is a little bit timid about what the fallout from this trip could be, a lot of Pelosi's colleagues here in Congress are absolutely supporting this planned trip.
All right, Emily Wilkins for us at the Capitol. Emily, thank you. Meantime, another twist in this story, Alibaba will seek a primary listing in Hong Kong, paving the way for investors in China to directly buy shares of the company's most prominent e-commerce company for the first time. This will also entrench Hong Kong as an alternative to U.S. markets. Here to discuss, Global X ETF's Director of Research, Pedro Palandrani. Pedro, I remember interviewing Jack Ma, the CEO of Alibaba at the time, on the floor of the New York Stock Exchange, and here we are, years later, Alibaba proposing this secondary listing in Hong Kong. Why now?
Yeah, well, thanks for having me, Emily. You know, if we step back for a second, Alibaba is essentially facing 2 dimensions of regulatory risk, right? First, they're getting fined or punished by domestic regulators for monopolistic practices or even creating national security risk, given the large amount of data that they have, right? On the second hand, there is a risk of getting delisted from the United States sometime in 2024 because of this Holding Foreign Companies Accountable Act, an act that is essentially threatening to exclude Chinese companies of U.S. exchanges unless they comply with clear auditing rules that apply to all U.S. listed companies. And I think this dual listing move is first and foremost a hedge against the delisting risk, but it can also help a little bit with the domestic regulatory risk, right? So On the delisting front, we've seen some willingness from both China and the United States to resolve the conflict. Actually, just a few months ago, the Vice Premier Liu He gave a speech where he expressed China's willingness to cooperate on this issue. However, the reality is that a smooth resolution is not a foregone conclusion just yet, and the risk of Alibaba, and for that matter, other Chinese companies, of getting delisted of U.S. exchanges in 2024 is still real. On the domestic regulatory front, I think that we've seen some positive signs lately regarding the easing of the tech crackdown. And I think that by making this move, Alibaba can probably win some positive favor coming from Chinese regulators. So, China clearly is hoping to preserve and build up Hong Kong's status as a global financial hub, and having mainland tech giants fall back onto the Hong Kong Stock Exchange is clearly in line with those goals.
What do you think this means for other U.S.-listed Chinese companies? I mean, are we going to see a slew of relistings?
Yeah, this is probably going to encourage the roughly 200 U.S.-traded Chinese ADR companies to follow suit, right? From e-commerce platforms like JD.com or Pinduoduo, or even China's search engine giant Baidu, EV company NIO. This move could definitely help solidify Hong Kong as an alternative venue, and it's likely going to encourage more activity over the next few months.
So what do you see is next here in terms of Alibaba's evolving relationship with its own government, the Chinese government, which, as we know, over the last couple of years has been incredibly challenging?
I think that's one of the main reasons of this primary listing in Hong Kong, right? I think Alibaba is definitely trying to work closer with the government in many regards. We're already seeing a lot of policies implemented by Alibaba to comply with this umbrella of common prosperity regulations in China. So I think most likely over the next few months, we'll continue to see these large internet companies working closely with regulators to avoid all of these regulatory risks that we face as investors over the last few years.
All right, Pedro Palandrani, Global X Director of Research. Thank you so much for joining us. Obviously, we'll continue to follow this Alibaba situation. Meantime, we're following new headlines coming in about Twitter. Twitter setting a date for a special shareholder vote on the proposed takeover by Elon Musk for $44 billion. Of course, we know Elon Musk is trying to get out of this deal altogether. They're fighting over the date for the trial to start, which is looking to sometime in October. But Twitter has now set the date of September 13th for a special meeting with shareholders. Interesting, of course, given that Elon Musk doesn't want this deal to go forward at all. But we've got our eyes on September 13th, and then the trial coming up sometime in October. Coming up, Walmart cuts its profit outlook. Shopify now cutting jobs as well. What does the future hold for e-commerce in a potential recession? We'll talk about all that and more next. This is Bloomberg. Now, could Walmart's surprise cut to its profit outlook signal doom for e-commerce? Consumers have little to spend on discretionary goods due to the rising costs of food and gas. Bloomberg's John Edwards joins us now to talk about the state of the e-commerce industry. And on top of these numbers from Walmart, John, we see Shopify cutting 10,000 jobs. This is a company that's been riding high over the last couple of years. How does this all add up to you?
Yeah, well, I mean, Shopify, for one thing, was interesting. They made a big bet that the shift to e-commerce that we saw during the height of the pandemic was going to be long-lasting and, in fact, accelerate, faster than anybody had expected before COVID. And that bet just turned out to be completely wrong. They, thought that people were not going to go back to in-person shopping at the pace that they did, but people have flocked back to stores, and so that led to Shopify having to cut a bunch of jobs.
What does what we're seeing here indicate about Amazon results, which we're expecting later this week?
Yeah, that's going to be really interesting to watch in light of what we heard from Walmart, because what Walmart is seeing there is not so much that spending overall is slowing down, but that the mix is shifting in a way that is going to cut into their margins. So people are spending less on big ticket items, less on discretionary sort of splurge items, and shifting their spending to food, fuel, things that are staples that people have to have. And so that really is where Walmart's profit warning came from. In fact, they raised their expectation for revenue overall, but the mix is such that it's going to be much less profitable revenue for them. So that's definitely going to be something to watch from Amazon on Thursday, because Amazon obviously likes to sell a lot of those same big ticket items that people are starting to shy away from.
Now, we were speaking about this with respect to Alphabet and Microsoft earnings earlier. I spoke with Alphabet CFO Ruth Porat, who used the word uncertainty multiple times. We're seeing these mixed results, slightly below estimate results, and it's causing some confusion about whether or not we're already in a recession.
Yeah.
Are we? According to these numbers that we're seeing from these e-commerce companies, are we?
It's hard to say, but I would say no for now. I think, again, it's less a complete slowdown in spending and more a shift in the mix. High inflation is biting everyone, and so it's changing the priorities that people have in terms of what they're spending on. But as we saw, in the earnings from companies like McDonald's, Coca-Cola, PepsiCo a couple of weeks ago, people are still spending on things like food, going out, buying soda and chips and things. So it's more of a change in the mix and less of a complete slowdown.
All right. Well, the story's not over, John. We're going to be watching those Amazon results coming out later this week. Thank you so much, Bloomberg's John Edwards. Appreciate your insights there. Meantime, another story we're watching. Russia says it will opt out of the International Space Station after 2024. Russia planning to focus on building its own orbital outpost, according to its new space chief. This move coming amid tensions between Russia and the West over the war on Ukraine. Russia says it'll fulfill its obligations to other partners at the space station before it leaves the project. And NASA says the ISS is scheduled to be decommissioned to crash into the Pacific Ocean anyway by 2030. Coming up, an update on the state of ransomware, the impact it's had on cybercrime. We'll break it all down with Wendy Whitmore, Palo Alto Networks. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to our top stories of the day. Microsoft and Alphabet, the first of the mega cap tech stocks to report results. Our Ed Ludlow back with the latest lines from the earnings calls. What have they said so far, Ed?
Yeah, it's interesting. Investor reaction is interesting too. You look at Microsoft now down 0.2%. It's been swinging between gains and losses. Microsoft missed on the top and bottom line, but what's interesting about it is that they said Azure Cloud in particular was a mixed bag. 1% weaker than expected, but they're still seeing big corporate deals. Microsoft executives saying that the number of $100 million and $1 billion deals in the quarter for Azure hit a record, which was a positive sign. They're calling it healthy growth. Alphabet, parent company Google, shares still higher, 2.7%. After hours on Tuesday. The real focus, as you know, Em, is on search. And what's really interesting is Ruth Porat talking about how travel in particular has driven a lot of the search activity on Google, which has helped ads hold up, although some of those customers in the travel sector are showing some worrying signs. You look year to date, these are two stocks that have felt some pain, not necessarily as badly as the rest of the mega tech pack has, but still, we're looking to find the bottom in this market and we want to see them bounce back. One of the earnings that we missed at the top of the show, Texas Instruments. When you think semiconductors, you have to talk about Texas Instruments. They make everything from your washing machine chips to your satellite chips. They have a hand in everything. Up 2.7%, showing a really strong outlook for the current quarter, and it's kind of changed the mindset that this demand for electronics from consumers has disappeared because Texas Instruments, according to their outlook, things are looking pretty robust.
All right, Ed, thank you. I want to dig in now to the state of cybersecurity, and Palo Alto Networks' Threat Intelligence and Security Consulting Team, or Unit 42, is out with a new report into cybercrime trends and predictions and the impact of declining economic conditions. How are these two connected? Let's ask Wendy Whitmore, Senior Vice President and Head of Palo Alto Networks' Unit 42. So on the one hand, cyber attacks, cyber threats seem to be quieter at the moment. Why is that?
That's a great question, Emily. It does seem that way. I don't know that that's actually the case. I think what's happening is that we haven't seen these mega breaches posted in the news. That's usually good news, actually, that we are not seeing as many of these massive leaks in the news. But the reality is that there is a new ransomware victim posted online with their data that are being extorted every 4 hours. We see new victims being posted on leak sites.
But you are reporting there could be an uptick in cybercrime because of the deteriorating situation in the economy. And we've been reporting throughout the show more bad news, whether it's results from Alphabet or Microsoft or Walmart or Shopify. Talk to us about how this could all have an impact on cybercrime.
Yeah, well, what we see is that whenever there is money to be made, there are certainly criminals that are attracted to that opportunity. So in over 600 cases that Unit 42 investigated last year, we saw payment requests as high as $30 million in ransomware cases. And the average is $925,000. So we're almost at $1 million as an average payment. There is a tremendous amount of money to be made. And to your point, there is still a much lower barrier to entry for the criminal side than it is for the defense side. Another interesting statistic that we identified that relates to that is that the average dwell time, meaning how long an attacker is in an environment before they go unnoticed, is 28 days. That means the longer they're in an environment, the more damage that they can cause, and that damage directly translates to the more amounts of money that they can receive on the back end.
I want to ask you about China. We're preparing for House Speaker Nancy Pelosi to visit Taiwan. The Chinese government not happy about this. At the same time, we're seeing Alibaba prepare for a stock listing in Hong Kong. I'm curious if you're expecting rising U.S.-China tension to potentially lead to an increase in cybercrime as well.
So I think the reality is, diplomatic ties or not, right? We've seen a tremendous amount of intellectual property theft coming from different nation states throughout the world. China is a nation state that certainly, alongside so many other countries, has gone back and forth with the United States on that. So in addition to ransomware cases, which we spoke about, one of the largest cases we see are business email compromise. And we do see there's an interesting amount of overlap between these cases and certainly nation state activity. I think as recent as last week, we saw North Korean, our team released research related to North Korean threat activity related to ransomware cases. So I don't think cyber criminal activity is going away anytime soon, whether it's at the economic crime actor or whether it's from a nation state capacity. We will continue to see more of it.
And what's the relationship with the crypto market? Obviously, we've seen extreme volatility in the crypto market. And as I understand it, that can also be tied to ransomware.
Well, so what I think you see are just massive amounts of money that are to be made in cybercrime. And certainly cryptocurrency has been one economic source that has really fueled that. So when we look at business email compromise, the FBI stat points us out as $43 billion US dollars of losses that have been occurred over the last 6 years in these cases. And when you compare that to what we're seeing payments made last year for our clients alone, upwards of $8 million US dollars, there's certainly a lot of money that's transacting, and much of that is occurring over cryptocurrency. I think there's certainly a lot of pressure going on from the US government and working with so many international governments to make it more difficult for cyber criminals to use cryptocurrency as easily and as readily as they have in the past. And we're hoping that continues to have a positive impact for organizations throughout the world.
All right, Wendy Whitmore, Senior Vice President and Head of Palo Alto Networks Unit 42. Wendy, Great to have you.
Thank you, Emily.
Meantime, it is the first major effort by the U.S. Congress to regulate big tech since the inception of the internet. Lawmakers could vote on the American Innovation and Choice Act before midterm elections. This measure would lay down ground rules for dominant companies like Alphabet, Amazon, Apple, and Meta. Earlier, I spoke with Alphabet CFO Ruth Porat and asked her about the various antitrust proposals. She said the proposals could break a wide variety of services and others we offer. That being said, we're very focused on what can be landed, and we're seeing progress in the CHIPS Act. We're focused on places like privacy legislation and updated protections to children. It continues to be a dynamic process. Coming up, Coinbase and the SEC at it again. Did Coinbase list securities or not? Why is it so hard to answer that question? We'll break it down next. This is Bloomberg.
Congress has looked at this issue, right? They want to opine on this. They want to try to find a pathway forward. And I think instead of doing this regulation by enforcement, we should be looking at the legislative process. We should be looking at the open executive order research and study that's going on right now to really think through this from a public policy perspective.
Kristen Smith there of the Blockchain Association on Bloomberg's Crypto Show earlier, reacting to the latest in the Coinbase SEC saga. Bloomberg has learned that the crypto platform is facing a U.S. investigation into its crypto listings. The SEC wants to know if the platform improperly let Americans trade digital assets that should have been listed as securities. Bloomberg's Allison Versperl joins us now from Washington, and of course our Bloomberg crypto contributor, Shonali Bosick, as well. Allison, I'll start with you. What exactly is the SEC contending here?
So the SEC is trying to, weigh in on one of the biggest issues facing the crypto industry. It's whether these exchanges like Coinbase are actually listing the tokens that they're listing are securities. And, if the SEC determines that they are, that potentially requires these firms to register as exchanges with the regulator. So it could be a big deal. It comes at a time when a lot of these exchanges are arguing that they don't offer any securities, that actually all of the tokens on their platforms are commodities. So it's definitely a hot debate right now.
Shonali, why is it so confusing? Why is it so hard to answer that question? Is crypto a security?
It's a good question. And think about how many renditions this argument has taken over the last couple of years, whether you're talking about NFTs or ICOs or crypto itself, the tokens itself. And I go back to what Brian Armstrong had said in a big tweet thread last year. Remember, this is when it really started to get very contentious between the industry and the agencies. And, what Brian Armstrong said at that time is they refused to tell us why they think it's security and instead subpoena a bunch of records from us. We comply, demand testimony from employees, we comply, and then tell us that they'll sue us if we launch certain products. So, to Allison's point here, a lot of this is being done through enforcement rather than rulemaking itself. So until the agencies decide what's a currency, what's a commodity, and what's a security, it's going to be very difficult for the industry to work around that.
Now, Allison, is this connected to the insider trading investigation that was brought against a former Coinbase manager just last week?
So the ongoing probe into whether Coinbase is improperly offering unregistered securities is separate, but it does have some ties that, the insider trading probe does have some ties that could connect to Coinbase as well. So in the SEC's complaint last week that dealt with, a former Coinbase employee potentially leaking information to his brother and a friend, at least that's the allegation. The SEC did identify 9 tokens that it thought were securities. And so at the time, before we knew about this other probe that actually predates those allegations, at the time I was talking to folks who said, this does have effects on Coinbase as well, because the exchange has said that it lists 7 of the 9 that were identified. So essentially implies, if the SEC thinks these are securities and Coinbase is listing 7 of them, then it's kind of a backdoor way of saying that, they do need to come in and register. And it works off of what SEC Chair Gary Gensler has been saying for a long time now, that he thinks a lot of these exchanges are offering securities, and a lot of them, need to come in and comply with his agency's rules.
Shonali, what are next steps here?
The next steps are interesting here because if you look, for example, just all the way back at Coinbase's S1, its IPO filing, it said that the evolving regulatory landscape would be a risk factor for investors. And look how much it has been one. The scoop that Ali had put out just today, for example, Coinbase's stock dropped about 20%. And with the total stock drop you've seen this year, the market cap has come down so much, Emily. Think about it. It is less than half the size of NASDAQ now. And when it went public, it was much, much bigger. So remember, exchanges in the United States, stock exchanges, have what the industry likes to call or think of as quasi-regulatory powers. So when you look at these big crypto exchanges, which are kind of the primary way here to regulate the industry or oversee the industry, are they going to look more like stock exchanges in the future, where they have rule-making capabilities, where they're more subject to SEC oversight, or also how much will the agencies fight it through themselves and have the CFTC have more claim over some of these assets as commodities instead? It's an open question, and it will be played out, it looks like, in courts in a lot of cases.
Allison, any precedent for where this could land, or none at all, because digital assets are so new?
So not a lot of precedent here in terms of whether digital assets are securities. This is actually the first time that we've really seen the SEC come out and list specific tokens that it thinks are securities, despite having said for probably over a year now that it thinks that these exchanges do have securities on them. So it's kind of a rare move for the agency. It's normally strayed away from making those specific identifications, partly because it's probably, we talk to folks who say it's not really in their interest to kind of pigeonhole themselves into, these assets are securities, these assets are commodities. By keeping it a little bit vaguer, it gives them a little bit more leeway.
All right. Thank you so much for clarifying a very confusing situation. Bloomberg's Allison Versperl, along with our crypto contributor, Shonali Bostic. Thank you both. Coming up, airlines are losing more luggage than ever. So, can bag trackers save you from losing your stuff forever? Spoiler, not really. That's next. This is Bloomberg.
The economy is catching up to Apple. For the first time in a while, it feels like the iPhone maker is especially vulnerable to outside economic factors like rising inflation, increasing interest rates, and the fluctuating US dollar. The company this week will report third quarter earnings that many analysts anticipate will come in about flat from last year. That compares to this time a year ago when Apple reported about 36% year-over-year growth. Analysts anticipate Apple to report revenue around $82 billion, with about $39 billion of that stemming from the iPhone, under $20 billion coming from services, about $7 billion coming from the iPad, $8.5 billion coming from the Mac, and about $8.8 billion coming from popular accessories like the AirPods and the Apple Watch. While these are certainly impressive numbers, some analysts and investors will probably be concerned about the lack of real growth. Apple already said, however, it's expecting a negative hit of about $8 billion to third quarter revenue due to China shutdowns related to COVID earlier this year, and of course the ongoing chip shortage. This week's report also comes amid the company's plan to slow hiring and spending in some divisions next year as it grapples with the possibility of a recession. Morgan Stanley and Wells Fargo have also already cut their Apple stock price targets given ongoing concerns about consumer spending in the near term. I don't believe, however, that any of these are real long-term issues when we consider Apple's big product plans for the end of 2022 and into 2023, which will include the company's first mixed reality headset, 4 new iPhone 14 models, 3 new Apple Watches, new iPads, and several new Macs. I'm Mark Gurman. This is Power On.
You can subscribe to Mark's weekly Power On newsletter at Bloomberg.com. Well, airlines around the world mishandle some 28 million bags of luggage every year. That's just one estimate, but it could be significantly higher this year as airports struggle with high demand and fewer employees. Now, folks can use trackers like AirTags or Tile to keep an eye on their belongings. But as our Brad Stone writes, knowing where your suitcase is might not be enough to help you get it back. Our Brad Stone, head of our Bloomberg Tech coverage, is here with me now. So you just took a nice trip to Europe, and they didn't lose your luggage, thank goodness, but you saw this play out firsthand.
That's right. We were pulling out of Heathrow, and a guy across the aisle is waving his phone urgently at the flight attendant going, "My bags aren't on this flight." And it turned out he had put one of those $29 Apple AirTags in his suitcase and could tell that he was one of the victims of the current chaos. And I just kind of wondered, are other people doing this? And it turns out they are. But knowing where your bag is doesn't necessarily ensure that you'll be reunited with it after your flight.
Right, I've heard so many horror stories and people saying the dot says it's right behind that wall, but they can't get it back. I mean, why is this happening? Why is it so much worse this year?
Yeah, I mean, that is one way where the AirTag can be useful. These airlines and their contractors are so overwhelmed right now, you know, knowing that your bag is behind a wall or hasn't left your point of disembarkation, like that can be useful. Why are they overwhelmed? I mean, I think it's a combination of technical snafus and staffing shortages. Airlines, like a lot of businesses coming out of the pandemic, were not prepared for the resumption of normal travel activity.
So if you're traveling, what should you do aside from not checking a bag? Do you use AirTags or Tile? I've gotten some pitches for smart luggage, for example.
I kind of came out of this convinced that even though you might not be able to do anything about your missing bags, putting an AirTag or a Tile device in luggage if you have to check it is a good idea. At least it'll give you peace of mind. You might not want to wait that extra hour at the airport if you know your bag's not there. But if you're going to check a bag, you're going to be really at the mercy of the airline and the airport.
Travel light, don't put anything important in it. Oy. I want to ask you a bit about this raft of earnings results that we've gotten. Kind of mixed. Microsoft not good. Alphabet, you know, mostly slightly below estimates. Advertising above estimates. I talked to Ruth Porat on the phone. She used the word uncertainty multiple times. She said that there are just so many different factors at play here. It's impossible to separate them out here. So the word we're using to talk about this is uncertainty. What's your takeaway?
Well, first of all, compared to the bloodbath of last week with Snap and Twitter, I mean, look, today's been a virtual celebration. But I agree. Headwinds, uncertainty when it comes to buying behavior, when it comes to advertising behavior. You know, the cloud spending is a little bit below expected at Microsoft and Google. And then you had this currency question with a strong US dollar and the lower value of overseas sales that I think it's going to weigh on all the big tech companies.
So obviously you've covered a few economic cycles. We're waiting Amazon later this week, Apple, Facebook as well, or I should say Meta. And there's this big question of, are we in a recession or not? And how is this really going to impact big tech? What are you watching?
Yeah, well, I'm the farthest thing from an economic evangelist here. It certainly seems to me we're in a recessionary period. I think, you know, for Amazon, we're going to look at obviously e-commerce sales, cloud growth. I mean, AWS, does it follow along with Azure and Google Cloud in seeing a little bit of a spending pullback? But, you know, the big tech companies are very well equipped to weather this, right? I don't think that any of the big four, big five really are going to have that significant a problem longer term. It is the companies like Snap and Twitter that seem constantly engulfed in this kind of turmoil that are very vulnerable.
Which, of course, are more sort of experimental ad markets. But who's to say that Apple, which depends on device sales significantly, isn't going to feel the impact of this? I mean, they're doing sales on their products in China.
Sure, and they probably will, and Mark Gurman has written a lot about that. But the strength of the Apple model, the health of the iOS ecosystem seems so strong right now. I don't personally imagine a protracted pullback.
Okay, well, we shall see. We're going to be covering, and your whole team is going to be across earnings all week. Thank you, Brad Stone, our senior executive editor for Bloomberg Tech. And that does it for this edition of Bloomberg Technology. Tomorrow, we're going to speak with Mitchell Green, Lead Edge CEO, after Spotify results, plus what he has to say about TikTok and Meta's continued competition. And don't forget to check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.
Bloomberg.